So you've been thinking about getting into real estate, but it's impossible without a mountain of cash, right? No. Let me stop you right there. That's one of the biggest myths out there. Real estate investing is way more accessible than you might think, even if you're starting with limited funds. In this guide, I'm going to walk you through the basics of investing in rental properties and show you how to take the first step towards building wealth. So whether you're looking for a side hustle, a long-term plan for retirement, or a way to escape the daily grind, rental property investing is one of the smartest moves you can make. And guess what? You don't need to be rich to start. All you need is a plan, determination, and willingness to learn. So let's get into it. I'm Bud Evans. I'm a 35-year military veteran, 13-year law enforcement. I started investing in rentals in 2019, and now I'm retired. So why ask rentals? Simple. It's the most reliable way to build long-term wealth. Rental properties generate income every month, provide tax benefits, and appreciate in value over time. And unlike other investments, you have total control. Stocks might tank because of market volatility, but a well-maintained rental property in a good area, hey, that's as close to a sure bet as it's going to get within the world of investing. The beauty of rental properties is that they create multiple streams of wealth. First, there's monthly rental income, which ideally covers your mortgage and leaves you with some profit. Then there's the equity that you're building every time you make a mortgage payment and appreciation over time. The property's value increases, and that adds to your overall net worth. You're making money in three ways, and that's tough to beat. Let's not forget the tax ramifications and depreciation. On top of that, owning rental properties gives you incredible tax advantages. Expenses like property management fees, maintenance costs, and even mortgage interest rates are tax deductible. So not only are you making money, but you're also keeping more of it in your pocket. Don't forget about depreciation. Depreciate that property for 27 and a half years if it's a single family property and get those tax benefits. Before you dive in, know what you're investing in and why you're investing. Are you trying to generate extra cash flow every month? Are you looking to build equity for long-term wealth? Maybe you're aiming for financial freedom so you can ditch your 9 to 5. Hey, whatever your goal is, be specific. Write it down because it's going to shape every decision you make. So let's break this down even further. If you're looking for cash flow, you're going to want properties that generate rental income well above your monthly expenses. If your focus is long-term wealth, you might prioritize properties in areas with stronger appreciation potential, even if the cash flow isn't that high. And if your goal is the combination of cash flow and equity later, you're going to need to find that sweet spot where the numbers make sense on both fronts. Setting clear goals also helps you avoid wasting time. Once you know what you're aiming for, you can narrow your focus to properties and strategies that are aligned with your objectives. So trust me, having a clear target is going to save you a ton of headaches down the road. Now, here's where most beginners get tripped up. They think they need a massive pile of cash to get started. But the truth is, I didn't have any money. You don't need it. What you need is a solid understanding of how financing options work and how to leverage other people's money. So let's talk about loans. Most traditional loans are going to take 20% down payment for investment properties, but there are ways to lower that barrier. An FHA loan lets you put as little as 3.5% down, and it can be used for multi-unit properties if you live in one of the units. VA loans, if you're a veteran, require zero down payment, are an incredible tool for getting started. But don't forget about the other options, partnerships and joint ventures. If you got the time and expertise but not the cash, team up with someone who has the money but lacks the know-how. It's a win-win situation. You split the profits, and you're leveraging each other's strengths. Let's not overlook creative financing options. Seller financing, lease options, or even hard money loans can be game changers when traditional loans aren't an option. The key here is to think outside the box and explore every avenue available to you. You probably heard it a million times, location, 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 but location really is everything in real estate. A great property in a bad area, it's a nightmare waiting to happen, but an average property in a great neighborhood, that's money in the bank. When choosing a location, look for areas with a strong rental demand, low crime rate, good schools, and a growing economy. These factors attract quality tenants willing to pay premium rents. If you're not sure where to start, give me a call, go to budevans.com and book a strategy session. Start thinking about areas you're familiar with. Local knowledge is a huge advantage when you're just starting out. If you're open to investing out of state, research markets with job growth, affordable property prices, and favorable landlord laws. Zillow, Redfin, and city planning websites are great tools for gathering data. Also check out citydata.com and niche.com. And don't forget to consider your tenant pool. Are you targeting families, young professionals, college students? Understanding who you want to rent to are going to help you zero in the right neighborhoods and your property types. You don't want to rent student housing in Trenton, New Jersey with no colleges. This is where the rubber meets the road. So before you even think about making an offer, you need to know the property is going to make you money. Start by calculating your cash flow, your total income. You're going to subtract out your monthly expenses, mortgage, taxes, insurance, maintenance, property management fees from your expected rental income. If the number is positive, you're in good shape. If not, walk away. There are always better deals out there. And have your bottom line. Is it $300 a month? Is it $500 a month? Don't forget about the 1% rule, more like a guide. This is a quick way to screen properties. If the monthly rent equals at least 1% of the purchase price, it's worth a closer look. For example, if a property costs 200 grand total, it should rent for at least $2,000 a month to be a viable investment. Is it always that way? Not always, but it's a good rule. Good. Account for unexpected costs. Vacancy, repairs, and emergencies can eat into your profits if you're not prepared. Good rule of thumb is to set aside between 10 and 15% a month for your rental income for these expenses. It's better to be overprepared than caught off guard. You can't do this alone, and you shouldn't try to. You want to build a solid team. It's one of the smartest moves you can make as a real estate investor. So, at a minimum, you're going to need someone to source your deals. Real estate agent who knows the local markets. You're going to want a reliable contractor, and you're going to want a good property manager and a really good attorney for your leases. Your agent's going to help you find the right properties and negotiate your deals. Your contractor is going to handle the renovations and repairs, making sure that your property stays in top shape. And your property manager, unless you're going to self-manage, is going to take care of the day-to-day operations, tenant screening, rent collection, maintenance requests, so you can focus on growing your portfolio. Doing your background checks is important. I recommend Rent Risk for that. Networking is crucial here. Attend local real estate meetups, join online forums, and ask for referrals. The connections you have will make it easier to find trustworthy professionals who can help you succeed. At some point, you got to stop analyzing and start acting. It can be intimidating, but the only way to learn is by doing. So start small if you need to. A single-family home or a duplex is a great way to get your feet wet. Just make sure that the numbers work and your property aligns with your goals. It's okay to make mistakes as long as they are mitigated. Every successful investor has a few war stories. I've got a bunch. But those mistakes are where you learn the most. The key is to start, even if it's not perfect, because the longer you wait, the more opportunities you're going to miss. Okay, so there you have it. That's a beginner's guide to real estate property investing. It's not reserved for the wealthy or the experienced. It's a game anybody can play if you're willing to put in the work. Start by setting your clear goals, understanding your financing options, finding the right location, run your numbers, make sure they're top notch, build a solid team, and most importantly, get out there and take action. Real estate investing is one of the best decisions I've ever made, and it's one of the best decisions you can make for your financial future. It's not just about making money, it's about creating freedom and options for yourself and your family. So, what are you waiting for? Get out there, get started, build your empire one property at a time. You got this. And until the next video, aim high. If you need some help, reach out to me. Go to budevans.com, book a free strategy session. It's 30 minutes. Just reach out. Until the next video, aim high. Thanks for watching. We hope you enjoyed it and learned something new today. If you did, please show us some love and smash that like button. Your support means everything to us and helps us reach more people like you who want to aim high in real estate. Don't forget to hit that subscribe button along with the notification bell icon so that you can stay up to date on all of our future content. If you're hungry for more real estate and finance related videos, we've got you covered. We can't wait to see your success stories in real estate investing. Till next time, aim high. We'll see you soon.